Good evening, folks. This is just after 10 p.m. here in the UK. It's the 5th of May, and we're just going to update on the S&P 500 and the DAX that we've been looking at. And you can see that this is the S&P 500 on a 4-hour chart. And you can see we have the sell-off from last Thursday, Friday. We came down, and now we've rallied back, and all we've done basically just hit shy of the 61% retracement. And you see we've had now a reversal candle into the close. Now folks, this 2900 2910 level is key. I won't risk any more than 2910 if you want to get short on this. In fact, I've got that ABCD drawn in the wrong place. It should be drawn from there. That's better. Let's just get into the right place. Sorry about this. There we go. That's where it should be. Right, so any move back above 2900 is telling us that this is probably wrong, but we're looking at a potential ABCD to the downside. I say any move above 2910 is telling us we're probably wrong, but if you get a stop at 2910, you're risking what, 42 pips. Your target's down here at 27.20, so you're looking at best part of 150 pips for 40 pips risk. So that's a decent reward to risk. If you want to be really if you want to be cautious on it, I'd wait while it takes out the low of this candle if you wanted to get short. If it takes the low of this candle out, I'll just put my stop above. I'll put my stop above the 618. 618 sat there at let's have a look where it is. It's sat at 2900. Put your stop 5 above that, 2905. Any move above that, you're wrong. And then let's see what unfolds. We've got to bear in mind, folks, that this is the sell-off. All this is a retracement wave of what I believe is a bigger ABCD to the downside. Now it's very early days. That'd be your first target. If it just pick up legs, who knows, you could get an ABCD of this magnitude, and that's going to take this secondary high here, G low. I think we already looked at this in a previous video, but we'll just take it again. There's your high to your low. That's your AB swing, and then your CD. So if this is the high, folks, this is a monster move to the downside. If this unfolds, you're looking at that. It's coming down to 2,000. So that could unfold quite easily. And if the bigger one, you don't want to think about this one, but if it takes that one, you're looking at something even more. That's sort of 1,800, isn't it? So, folks, this could easily happen with what's going off. So you never know, but it's early days. So just take it a step at a time. This could be an ABCD, and then she starts higher. We don't know. This is the beauty of trading. You don't know what's going to happen next. So it's all probabilities. So you look at the scenario. You look at your bigger picture. You see your patterns have completed in this zone. We've backed off. Now we've come down at a lower high at the 61% retracement. You know that any move back above that is telling us we're probably wrong. Yeah, it could get to 786 and then start down. But yeah, you have to put your risk somewhere. You have to calculate your risk. So you look at it and you think, right, well, this is a bearish candle. So if it starts down now, if it turns and gets back above there, then you don't want to be out of the trade, don't you? But if it starts to pick up momentum, then what you do is you just lock in a little bit profit, get to break even as quickly as you can. Not too quickly, because the market can swipe back, stop you out, and then fall down. So then all you do is just take it step by step and see where she unfolds. So that's what I'm seeing in the S&Ps. Now the DAX looks a lot weaker. If we just have a look at the DAX for a minute, here's the DAX. Just panning on that. This is a 15-minute chart, I believe. Take that off a minute. Yeah, this is your 15-minute chart. And if you look at this, all the DAX could do, it's only done a 382 off this. Let's just tidy this up a bit. Let's take them off and put them back on again. So, that one, and then let's just put them back on so it's not so messy. That's better, so we haven't got so much. There we go. And you can see what we've done is a 382 off the high we made here, and we've 786 off this one. So, and then that's basically a Gartley off there in the blue one right here, and then we've got a 5-point expanding reverse wave right into there. Now we've done a little ABCD down, as you can see. Now this ABCD down, that might be all she does now. She starts up. So if she starts higher, you put the next piece of the jigsaw in. This is the ABCD from this one. If we get back above this point C here, this little ABCD to the downside, A, B, C, D, you can see there. Now, if this starts back, once we get back above point C, folks, that's telling us that it probably wants to go higher first. So there's your next swing higher, A, B, C, D up there. That's going to take you to 10,850. That'll equal a double top with the high over here. Okay. And all it'll do is extend these A, B, C, D legs a little bit further. That's all it'll do. So keep your eye on it. If she's going lower, this is probably where she'll start. So this is all how you do it with pattern recognition, folks. So hope this update helps you. I'll keep you posted as the week goes on. So take care, trade safely, keep your stops tight, not too tight, but obviously tight enough to calculate your risk, and so you know what. That's all you can do in this game, folks. Calculate your risk, and then the market will do what it likes. You just calculate how much you're prepared to risk to find out if a setup's going to work. So there's decent reward on these short trades if it starts to pick up legs to the downside. So you've got to respect the fact that we're making these higher lows, but the fact that we can't go anywhere to the upside, we're really struggling to make any upside progress. That's telling you that it's probably a bearish bias, so this is where we want to be looking. So hope this helps. Take care, speak to you soon, trade safely, and bye for now.